What's going on, guys? Welcome back to another video. In this video, I've got a pretty interesting NIO update for you. In this one, I'm going to give my price predictions as well as go over all of the analyst price predictions that NIO has gotten in the recent past and what we can expect from NIO going into the next couple of months. So make sure you stick to the end of this video so you make sure that you have all of the necessary information going into the next couple of weeks with your NIO positions or NIO trades. So before we get into all of that information, if you guys enjoy what I have for you in this video, please go down and hit the like button and hit the subscribe button. It really helps me get this information out to as many people as possible, and you get to stay up to date on all of your favorite stocks and learn about a couple of new ones. So if we go over and take a look at the chart of NIO, we can see that it had a pretty massive run up into the NIO Day event where they announced some very good news, and then the information kind of disseminated and NIO fell a little bit throughout the week, and it had a little bit of a rally coming up in the recent past, but it's kind of been settling in the high $50 mark, around $57. Now, I'm thinking that NIO is in its consolidation phase right now. It just had a really massive run up and it is making a bit of a lower high, or a higher low, So if we look and see at NIO's past run up, it went from the $26 mark all the way up to around $55, settled in around the low 40 mark before going all the way back up, breaking its highs and going up to $63. I don't think NIO is going to go anywhere below the $55, $54 mark in the near future, unless there's some pretty bad news that comes out about the company. Now, NIO in general is a very news-driven company. They really have a lot of different run-ups when they have a massive news event, such as NIO Day or their delivery numbers. So NIO doesn't really have another massive event planned in the near future. We're going to have earnings, but the next big day I think we're going to see for NIO is going to be its delivery numbers for Q1 and January of 2021. Now, the first delivery numbers that are going to come out are January of 2021, so make sure you're on the lookout for those numbers. And then the earnings date for NIO is predicted and estimated to be in the beginning of March. Now, that is not confirmed yet. We'll probably get a locked-in date towards the middle or beginning of February, and then we can kind of position ourselves to play the run-up into NIO's earnings before it happens. So right now, I think if you're holding NIO, you just kind of got to wait it out until the next event is coming in the near future, which, as I said before, is going to be the delivery numbers. Now, I don't think it's going to go down anywhere past the $54 mark. That just wouldn't make a lot of sense unless something comes out that we do not expect. NIO has also gotten a very significant price target raise recently from JP Morgan, up from $50 to $75. That is a 50% increase in price target, which is a very good sign. The analysts at JP Morgan reiterated the buy rating on NIO and cited 4 initiatives announced at NIO Day. The 4 initiatives included in-house autonomous driving based on NVIDIA technology. They announced their NVIDIA partnership, and I think they're also working with Qualcomm, and they are going to be commercializing LiDAR, which is also very interesting. LiDAR is really basically used for autonomous driving. NIO also announced their new sedan, the ET7, which is going to be a direct competitor of Tesla. As we can go over here, we can see that Tesla also just got a pretty massive price target raise. They more than doubled the price target to about $1,036, which is actually pretty insane. Their previous price target at Oppenheimer was $486, and Tesla is already trading so far above that mark that these analysts said that we're going to give it a pretty massive price target raise. Now, a lot of people are speculating that there is a pretty massive bubble in Tesla right now. We're going to wait and see, really. I think that's going to be determined on Tesla's earnings date, and that's going to really affect NIO as well because they're a very popular electric vehicle company. Now, as I've said before in some of my other videos, the valuation of these electric vehicle companies doesn't only come directly from the vehicles sold. As we've seen with Tesla, they're valued at about over $1 million per vehicle sold. So they're really being valued based upon the technology that they're able to put in these cars and the expansion of this technology and the new things that they are developing every month, year, week, everything. NIO has also received a price target raise from Bank of America. If we go over here, we can take a look at the upgrade. It wasn't that crazy. It was before NIO Day, and right before NIO Day, NIO actually exceeded this price target, but they raised the price target from $54.70 to $59. As we can see right now, NIO is trading at $57.71, and I think we could see NIO stay pretty flat throughout the next couple of weeks until we get some more news. In addition to this, NIO has also raised about $1.3 billion of convertible debt notes. Now, we can take a look here. NIO announced a debt offering to the tune of $650 million in convertible senior notes due 2026 and another $650 million in convertible senior notes due 2027. Now, the company also offered the option for initial purchasers of the notes to buy up to an additional $100 million of 2026 notes and $100 million of 2027 notes. Now, this is actually pretty bullish for the company. They're selling off their debt, and it's not a typical share offering where they dilute the actual share amount that's in the market and by offering shares at most likely a lower price than the stock is trading at. So now let's get into some strategies on what you can do if you have a very massive position in NIO in terms of your shares. So I don't think NIO is going to go absolutely crazy up or down in the coming weeks unless we get news. That's the key part. NIO is going to stay pretty flat unless there's something that is unexpected that happens. So if we go to the option chain, we can see that this is the January 22nd expiration date. There's only 2 days till expiration, so we're going to kind of stay away from that. Now, this is 9 days till expiration. This is the next week. Now, what I'm going to say that you can do with your NIO position is covered calls. So basically what you are going to do is if you own 100 shares of NIO, you can sell the right to sell your shares at $60 and collect a premium of $186, as you can see right here. Now, if the stock does not reach $60, you can take this $186 and buy more NIO shares and lower your cost basis. Or if you're fine with selling your NIO shares at 60, your shares would get called away if NIO reaches the break-even point on this trade, which the break-even would be about 61.86 if you add the strike price to the premium that you would receive. Now, the implied volatility on this option chain is way less than we saw when NIO was heading up into NIO Day, and you can also see that the open interest is very low compared to what we saw going up into NIO Day. Now, there is some unusual open interest on the 70s for next week. I don't think there's any chance of these hitting. Now, I always could be wrong, but the volume you can see here as well, it's a lot lower than we saw on the run-up to NIO Day. Now, these $60 calls also have a volume of 11,648. So 11,648 were traded today, January 20th. Now, I think selling covered calls is going to be a pretty good idea if you already have a large position in NIO, but if you have some cash sitting around and you already have a position in NIO and you're thinking about buying more, you can also sell some cash secured puts. Essentially what this is that you're selling the right to buy 100 shares of NIO at a certain price. So basically you would collect $155 in premium, but you would have to put up the collateral to buy 100 shares of NIO at the $55 price point on or before January 29th. So you would need to have $5,500 in your trading account sitting aside in order to make this trade. Now, you can make it a little bit lower. Now, if you go to the 50s, you would only need $5,000 in order to do this, but the premium that you would collect would be a lot lower. You would only receive about $43, not even enough to buy one NIO share. Now, the reason why people would do this is mainly to lower their cost basis if you are selling the covered calls. If you do enough covered calls, you can actually get your cost basis for your shares to zero or a negative amount, meaning that you were paid to actually own a certain amount of shares. Now, this takes a lot of time to do, and you have to execute a lot of these trades very perfectly. So if you were to do these $65 calls, you would only collect about $73 in premium, and you would be able to buy about 3 shares of NIO every 2 weeks if you were to do this trade. That would mean that you would need about 150 weeks in order to buy 100 shares of NIO if I am doing the math correctly. So it's going to take a while in order to get your cost basis to zero. If you want to do it in a shorter amount of time, you just have to go with contracts that are closer to the money. But that brings in assignment risk, and your shares may get called away if you do end up, if the stock actually ends up going above the strike price. So that's going to be it for this video. If you guys enjoyed what I had for you in this one, please go down and comment down below your thoughts on if you're thinking thinking about using any of these option strategies to make some more money on your position in NIO, or comment down below your thoughts what your price target is for NIO in the coming future. So that's going to be it for this video. I hope you guys enjoyed, and I'll see you guys in the next one.